Welcome this morning. It's the Real Investment Show. I'm your host, Lance Roberts. Michael Leibowitz, certified financial analyst, joining us as well this morning to talk a little bit about trust, talking about the importance of the full faith and credit in the U.S. government, because that's what actually backs our currency. Our currency isn't backed by anything. We used to be backed by gold. We could back by oil. We could back it by some other asset that has a deep and stable value, and that would give our currency much more stability. But instead, our entire value of our currency, what people perceive as value in our currency, is really based upon the trust of the federal government that they're going to make good on that currency at some point. And of course, we've seen what happened to countries where people have lost faith in the government. Venezuela, the Weimar Republic, if you want to go back to pre-World War II. When it happens, when individuals lose faith in the currency and lose faith in the government that backs the currency, that's when you get massive, rampant, runaway inflation, which becomes problematic on a whole variety of issues. But you know, the trust factor is very, very important. And so Mike wrote a really good article about, you know, this and the Fed and QE yesterday, and it's on our website now. I certainly encourage you to read it. Mike, welcome to the show this morning. How are you?
Thank you. I'm doing well. Thanks for having me.
Sure. So tell me a little bit about, you know, kind of what your thoughts are on this.
So the gold standard has been around for thousands of years, whether it was used gold directly for trading or paper bills, dollars, pounds, whatever it may be, that were backed by gold in a vault, which is the gold standard. And between FDR and Nixon, the gold standard was taken away. And I believe the reason that it was taken away is because the gold standard is essentially a rules-based monetary system. In other words, you have to have gold for your dollar bills, so the amount of dollar bills in circulation and throughout the economy is limited to the amount of gold. Now, it happens to be that gold production tends to rise approximately with GDP. Look, it's arcane to have it backed by gold, but it is much less arcane than a system where it's backed by the whims of politicians and monetary authorities to do whatever they want with it. So gold basically is a rules-based system, and it's nice because it basically handcuffs the central bank, the Federal Reserve, the Bank of Japan, the Bank of England, whoever it is, it handcuffs them in their ability to print money at will. And that's what's going on in the world today. All those banks, and European bank too.
You know, it's interesting. I was reading a survey. It showed the level of concern, it was basically based on Google searches, right? How many conservatives were Googling or searching or being concerned about the deficit prior to 2016 versus post-2016. And prior to 2016, it was one of the highest ranked searches by Republicans about the deficit, because we were all talking about, you know, it's amazing, you know, Barack Obama has doubled the deficit. He's run away with the deficit, and he's spending, you know, with no constraints. And, you know, this debt's going to be a problem. And as soon as Trump's elected, no, they don't search for it anymore. It was basically right. The search went to zero. We don't care about the deficit anymore. But the thing is that what the gold standard does do, and again, I don't think we can use the gold standard. My opinion is simply not enough gold in the world to support an economy the size of the global, you know, economy now. You're going to have to use something else. I agree. You know, maybe
we just
oil.
Need a standard.
Yeah, you need a standard. Maybe
we need
oil.
A standard,
right?
A law, a rule.
Yeah, some standards, some rule. It could be oil. It could be the number of shoes in my wife's closet. It could be a variety of things.
Then we'd have runaway inflation.
Probably. But if you have a standard, then all of a sudden governments can't just print and spend money without constraint. All of a sudden, they have constraints with which they have to live into. They have a budget they have to adhere to, which gives economic stability a much better footing.
Correct. I mean, that's the bottom line, is that there are no rules. So the article I wrote kind of starts out talking about the Federal Reserve. And we've had liberal and conservative chairman of the Federal Reserve. Greenspan and Bernanke were both conservatives. Yellen and Bernanke were very liberal. Actually, I'm sorry, Bernanke started conservative. He was liberal. Yellen was liberal. Greenspan was conservative, but it didn't matter. Mm-hmm. They all juiced up the money supply. Volcker was actually liberal, and he did the opposite. He was the last one. Then on the political side, like you just alluded to, Lance, mm-hmm. whether it's Obama or Trump, they're just running massive deficits, And now what we're coming upon is the fact that those deficits can't be funded easily. So what's happening? We have QE4, we have talk of MMT. Basically, something so that the Federal Reserve, to some degree, has to fund those deficits, and they're funding it by printing money. And like anything else, the more of something there is, the less it's worth.
Well, and again, just very quickly for our listeners, the MMT is this kind of this new upshoot that economic theory that's really kind of gaining some traction. Stephanie Kelton over at Stony Brook University, she's been a big promoter of this. Of course, she was also the kind of lead economist for the Bernie Sanders campaign, if that tells you where she leans. But the idea of modern monetary theory is that simply deficits don't matter. You can run as much debt as you want as long as you can print your own currency to pay for it. And the debts and the deficits don't matter until there is inflation. But therein lies the hook, because if you ask the average person what is their personal inflation rate, they're going to tell you that it's 4 to 5%. Housing prices, student loan costs, credit card interest rates are going up. Their wages aren't keeping up with the rising cost of food and eating out and utility costs, et cetera. Buying basic utilities like a phone, which is now a utility, has gone up dramatically over the last 10 years. So the real inflation rate for the average American is much higher than what the government tells you is. That's basically 1.5, 1.8, whatever it is. That they're saying we have no inflation. There's a lot of inflation depending on where you look.
Right, but I wouldn't say it's runaway inflation. You're right. It is 3, 4, 5%, and it varies widely based on
where you live,
how old you are, your family, this, that, and the other. But what's important is just to study history. Anytime countries have abused their currency, which is what we're doing, which is what most countries are doing, it doesn't end well.
Right. And again, look, there's plenty of examples of this. Like I said earlier, now you take a look at Venezuela, you take a look at Puerto Rico, even and the Weimar Republic and Zimbabwe. You see these things, and we always tend to believe, well, that's those countries, that can never happen to us, but we're doing exactly the same things, and these ideas like MMT are exactly that pathway that they went down that led to those problems. There's a lot of talk now about socialism and communism. In fact, we just wrote a 3-part series on our website talking about capitalism, which is on the front page of our website. We encourage you to read it. But talking about the value of capitalism, and the problem is that capitalism, at its very core, is based upon really 2 things. One is a rule of law, and 2 is an understanding that there is value within the underlying structure of the economy. And once that's lost, once you start moving towards socialistic or communistic tendencies, you lose that ability. And when people lose confidence in the rule of law more than anything else, they don't want to do business in your country. And then all of a sudden you really lose your foothold. And that's the kind of the first phases of that loss of confidence in the currency as well, that leads to a whole variety of other problems.
Right. And when a dollar earned is not a dollar, that's a big problem. And that's where you end up with much more, strife in the community, in the society, and much bigger problems that are economic and political.
It's kind of like like the rise of $15 hour minimum wage, right? We need higher wages because people are having trouble making ends meet. But it's kind of to your point, right? We're seeing that strife within the economy, which is why we're seeing these demands.
Right. So, Lance, if you want to do a little experiment today on Twitter, go on Twitter and say, I believe we should have a gold standard and something else. And watch, you're going to get ridiculed and demolished on Twitter for saying that, although all you're really saying is, I believe we should have a standard, a rule, a rules-based system in which we issue our currency.
Exactly.
And that's all we're saying. You can put whatever you want instead of gold. I don't care. But it's a rule.
I think I will just save myself the grief and not do it. This morning, it was interesting talking about, I touched on this at the beginning of the show, talking a little bit about the Brexit announcement, and that they've come to a tentative agreement on Brexit. And of course, this still has to go through Parliament, which is, a real possibility that it dies in Parliament. But then even if they get the Brexit deal done, they've got to work on a trade deal, and not just with one country like we've been doing with China. They've got to do it with countries all over Europe, which is going to take years. Is there ever going to be an end to this?
Well, they have to do it with every country in theory, right?
Right.
Because they did have EU. They were under the EU umbrella. So now, and we're seeing everyone is fighting in the trade war. It's not just the U.S. against other countries. We're seeing it, Japan and Korea going at it. And so this is going to be really tough for the UK if they do leave the Euro region, which it is starting to look like that is going to happen. Although, like you said, if it doesn't pass Parliament, it's not going anywhere.
Right. I was just wondering at some point where somebody just doesn't say, you know what, I'm just tired of messing with it. We'll just stay. Just never mind. It's not worth it. We'll just stay where we are. Because you almost got to think that at some point, the Britons in particular are getting tired of this kind of ongoing, just as Americans are getting tired of this whole trade deal, they've got to be getting tired of this whole Brexit deal.
Brexit won 51 to 49 or something very marginally. So half the people right off the bat are not for leaving. Mm-hmm. So it's not hard to get 4 or 5% of those people that voted for Brexit to just say, you know what, this is awful. Let's just stay.
Yeah, no, I think that's the big fear is that if they did do another referendum, hey, let's go do another referendum just to see if everybody still wants to leave. I think you would probably see a big swing in the other direction of people wanting to stay in the EU just simply to get rid of the deal, right? Just to get this over with so they can get on with their life, because it does have implications. What I found interesting is we've got the Fed doing QE, we've got the Fed cutting rates, we've got a trade deal of some sort with China. Now you've got Brexit deal, and yet the markets have been unable to make new highs. And, that's something that we're watching very closely, because I think that has a lot more to do with about where we are in this economic cycle than anything else.
I think you said it a day or two ago, we're priced for perfection. The market was priced as if there would be a trade deal, as if Brexit would not occur, as if a friendly Brexit would occur, and that the economy would be fine. And yeah, we sort of maybe have a phase one trade deal with China, although that still hasn't been signed. Yes, Brexit may occur on friendly terms, but that may not pass Parliament. And we've been talking about the economy showing some signs, especially in the manufacturing sector. But one thing that has really caught our attention the last probably month or two is labor and the consumer. Personal consumption, what me and you spend, is roughly 70% of the economy. So really, to call a recession, you have to say that the consumer is going to slow down their spending, get laid off, those sort of things. That's how you really get to a recession 90% of the time. And we're starting to see it. Retail sales were very weak. They were negative on a month-over-month basis. Mm-hmm. We're seeing signs in the labor market, although not from the main monthly BLS report, but other reports are telling us that there are some real concerns. So the question is the consumer slowing down? Is the monthly retail sales number a one-month fluke? We don't know. But we have to pay attention, because this is riding on the consumer, and the consumer is getting bombarded with recession warnings, recession headlines on all the major media outlets. If you open up the paper today, something about retail sales, is this warning about a recession? We're closely watching the consumer behavior, consumer sentiment for signs that there is a change in consumption, because that could be a really big deal here. We've
talked about the fact that, yes, there's been some wage growth, but wage growth as a function is about where it was in 1998 on an inflation-adjusted basis, but cost of living has risen markedly since then. And we've got an article on our website today talking about the Bureau of Economic Analysis. They have a savings rate calculation, and currently they say that Americans are saving 8% of their salary. But if that's the case, then why do we have record credit card debt? Why do we have an average deficit between the cost of living and incomes of about $2,600, which explains why we have record credit card debt? You have 80% of Americans that have less than $1,000 in the bank saved up. What the government says that people are saving and should be saving is vastly different than what's happening in the real economy.
You started that with something very interesting. You said wages have been flat versus the cost of living, meaning they've been rising with the cost of living. Earlier in the show, you made a comment that inflation's running 1.5%, 2%.
Right.
That's how the cost of living is calculated. So if your wages have been rising at the rate of inflation, of stated inflation, call it 1.5%, 2%, then yes, wages are flat. But we all know that wages have been running more. So if inflation is 4%, like we discussed earlier, between education and healthcare and all these other things that have seen runaway inflation, then real wages have actually declined.
Yeah.
And that's the problem. And that's what's keeping savings rates. It's keeping them in the low single digits, regardless of what the reports are telling us.
Yeah. The premise of the article today is we were talking about modern monetary theory a second ago, and Stephanie Kelton made this comment that, running deficits is a good thing because it increases private savings. The reality is that running deficits is not good because it slows economic growth. Debt and deficits, it sounds good in theory if you're trying to support ideas of Medicare for all, if you're trying to support the idea that we can just give everybody money and don't worry about your house, no, we're going to pay it for you. And we're going to pay off all your student loan debt and the process of this. That all sounds good to people that want those type of things. But the reality is that economically, it's not beneficial long-term to creating economic wealth and prosperity for the majority of Americans.
Debt is fine if it's productive in a big economic point of view. If it's productive and if you're going to borrow money to create something even bigger that spits off more profits, more money, a better economic environment, if it's the government, then yes, that's fine. But there are many ways to prove that so much of the debt of yesteryear has been unproductive, and so many of these pipe dreams going forward will be unproductive, that again, we're just hampering economic activity, trying to boost the current quarter or two by a little bit of growth that's just costing us in the long run. It's costing our kids. That's who we're really punishing here.
Absolutely. Look, I mean, almost 98 cents of every tax dollar that we bring in terms of tax revenue goes to service just Social Security, prescription drug benefits, and interest on the debt. I mean, basically just our welfare, which means everything else we spend as a government, from defense spending to education to everything else that the government wants to pay for, has to come out of debt. And that number is only getting worse. That service requirement of the social welfare system and interest on the debt continues to grow. Interest rates have fallen by almost 50% from where they were, 5 years ago. Yet the amount of interest that we're servicing on debt has actually almost doubled in that same time. So interest rates are going down, but our interest servicing costs are going up because we're layering on that much more debt, even though we're layering on at lower interest rates.
Even those other spending items, defense, education, whatever it may be, how productive are those? Should we have troops all over the world? And, that's a political argument. But, we just need to question all of our spending and how productive is it? And is it making us a better, safer nation?
People talk about the fact that we spend so much money on defense, right? We have a bigger defense budget than any other country in the world, and a bunch of countries combined. Our defense budget is bigger. But we're also the first country in to go take care of other countries' problems when they need help. And that's something that we've chosen to do. We've chosen to kind of be the police station of the world. And that's fine. We can reduce our defense spending. But to your point, we've got to start focusing on our own economy and stop worrying about trying to support everybody else. We have $150 billion a year that goes out into foreign aid to countries that basically don't even like us. But we send them foreign aid every year. So when you start talking about wanting to change things, and if you don't like the defense spending, great. We got to bring our troops home, and we've got to just focus on the national security of the U.S. and not worry about anybody else. There's consequences for that, but those are choices that we can make, and we've just been unwilling to make those as a nation.
When we talk about doing better for the economy, we're not talking about doing better in the fourth quarter of this year or first quarter next year. We're talking about 2023, 25, 27, the future. And some of that is painful because we will have to cut spending. We will have to change our habits. We will have to borrow money to put into to invest, not to consumption that helps us today. So it's going to take a huge change in mindset from politicians, from both sides of the aisle, and from most consumers.
Well, let's see. Let's talk about the odds of that happening. Yeah, that'd be none.
0.
Yeah.
slim to none, and slim just left town.
Exactly. And the problem is that those mindsets will change. Those mindsets always change after the crisis occurs. Whatever that crisis is, that's when hearts and minds are changed. But unfortunately, just after the Depression, you've got to have that type of event to get people to focus on what really matters. Mike, thanks so much for your time today. Wraps up the Real Investment Show. Be sure to go by our website. We do have a new article out this morning about the savings rate and why it's entirely wrong and what that means for you as an investor. It's on the website now, realinvestmentadvice.com, along with our last newsletter, our YouTubes, our podcast, and our great interview with Daniel Lacal talking about socialism and the equality and freedom of capitalism. It's on the website now, realinvestmentadvice.com. Stick around. Chris Salcedo coming right up.
It's a rich man's world.